Welcome back, investors, to Ticker Time News. I'm Adam, and here's the latest segment from the After Hours show. Okay, we got to talk about Samsara. The ticker symbol will be IOT. As a record-setting year for the IPO market nears its end, activity is poised to decelerate over the next few weeks of 2021. However, before the books officially close on the year, at least one more high-profile deal is expected to launch. That IPO is Samsara. The ticker symbol will be IoT, like Internet of Things. Samsara, which pioneered the Connected Operations Cloud, a platform that helps businesses in the logistics, construction, transportation, and energy industries, tapped into data captured by Internet of Things devices. Since its founding in 2015, Samsara has grown rapidly, capitalizing on a massive market opportunity within businesses that heavily rely on physical operations. The company's 35 million share IPO is set to price tomorrow night within a $20 to $23 price range and open for trading on the New York Stock Exchange on Wednesday morning. If Samsara's track record of generating buzz in the private market is any indication, then its IPO should attract plenty of interest from institutional investors. As a private company, Samsara raised nearly $1 billion in capital, including a huge $700 million round last year that valued the company at $5.4 billion. At the midpoint of the projected range, Samsara would be valued at $10.7 billion, essentially doubling its valuation in the span of just 1 year. For early investors, that's not too shabby of a return. The question, though, is whether the new valuation leaves much room for upside growth from IPO investors who will be asked to pay a steep price for the stock. Even if Samsara doesn't open for trading with a significant premium to the IPO price, its estimated forward PE will fall in the high teens range. While the company's growth rates are impressive, the lofty sales multiple does represent a major risk, especially in an environment in which growth stocks are coming under fire. Valuation aside, there are some notable positives in Samsara's corner. First, its subscription-based business is very intriguing as it fills a critical need for businesses across many industrial areas. Its Connected Operations Cloud platform collects and stores data from sensors, cameras, and motion detectors, which can be used for a variety of purposes. For instance, a trucking company can detect high-risk behaviors from its drivers, or it can use saved video to clear drivers and dispute fraudulent claims. In its investor presentation, Samsara provided another use case, outlining how crane and hauling company Bragg Companies employs the platform to track when trucks show up to a construction site or to monitor engine diagnostics to reduce idling time, which saves on fuel costs. With a core customer base of over 13,000 and revenue growth of 74% to $302.6 million for the 9 months ended October 30th, it's apparent that Samsara is gaining plenty of traction in the market. However, based on the size of the total addressable market or TAM opportunity, it's also clear that the company is still in the early stages of its growth curve. Specifically, it estimates that its TAM will grow in a 3-year compound annual growth rate of 21%, reaching $96.9 billion by the end of 2024. That would be one heck of a ride for IPO investors. While Samsara is adding new customers at a rapid pace, the challenge it faces is extracting more spending from existing customers. Its definition of a core customer is one with annual recurring revenue north of $5,000, a pretty low number for a cloud company. To expand within its own customer base, the company intends to increase the number of physical assets integrated with its platform, while also expanding across its customer sites and divisions. Accordingly, the company has been bolstering its sales force, illustrated by its $166 million, about 55% of revenue, in sales and marketing expenses for the 9 months ended October 30th. With sales and marketing costs accounting for such a large portion of revenue, it's not surprising that Samsara is not profitable yet. For this period, the company posted an operating loss of $102.1 million. On its own, the operating loss isn't overly concerning, given that Samsara is investing for the future. The potential issue, though, is that its growth rate is sliding lower at 108% in fiscal year 21. As the losses pile up while investors are being asked to pay a hefty price for the stock's IPO, in the IPO market, timing is critical. These issues may be overlooked in a hot market for growth stocks, but in today's environment, things have changed. I'm not sure that investors will greet Samsara with open arms, despite its intriguing potential. What do you think about this new company, Samsara? Do you think that if it went through with its IPO earlier in the year, when everyone was looking for the next IPO, it could have been very successful? Or do you think this is just a company that's got a lot of success, but it's not going to be attractive to too many investors? Let me know your thoughts and opinions in the comments below. And remember, your comments make these videos so much better. Thank you for watching this segment from the After Hours show. If you want to watch it live, then join me on this channel every day the market is open around 5 p.m. for the latest stock market news, deep dives on your favorite ticker symbols, and most importantly, answer your questions. Make sure to click the like button and share this video with others so we can all reach financial freedom. Thank you so very much for watching, and I will see you in the next video.